Alright, welcome back. This is designing your own trading methods. This is part 2. In the first video, went over the process of a swing cycle and how price moves in contraction expansion. If we understand the process, we can begin thinking about how to design methods for different parts of that process. In this video, if we're going to do all that, we need to begin to make some definitions, some distinctions. So we're going to talk about swings and some of the principles and define a few things, some of the nuts and bolts. If we're going to design our own methods, or get a deeper understanding of the methods we're using, we're going to need some kind of frame of reference along with a healthy dose of curiosity and discovery. And so we're going to use swings, right? We're going to use swings and pivots and define this stuff, and that'll be our frame of reference. I understand this can be a bit daunting, but even if you don't design your own methods, you want to have a deeper understanding of the methods that you do use. All we need is to understand the pieces and how they work. Now you might think to yourself that it's a bit audacious of you to think you can design your own methods, but you got to be a bit audacious just to be a trader. And like I said, even if all you get is a deeper understanding of the methods that you're using, and so you can then adapt them to your particular needs. Alright, so let's dive in. Like I said, what we're going to do is just make some definitions and distinctions and try not to make this video too long. Let's understand the principles, and we're just going to talk about mapping markets and the components, okay, and the principles behind them. So I'm just going to pull from a slideshow here, and let's just begin by going over some of the principles. If we understand the principles, we can begin to design. So basically, all markets move in contraction and expansion. It's the movement of a cycle, okay? And all market structures, any market structure, they're all derivatives of either gaps or swings, and so we'll begin talking about that. The movement of price bars is just reflecting supply and demand at any given time. Now, continued and change in behavior. This is let them build it. With this understanding alone and some observation, there's a lot you can do. So, continued behavior is just when the market is doing something over and over. It stays the same. All right, it's organized. It's an agenda. So, for instance, the market might be moving in same size swings, and that's a lot of good information. And then you know when that changes. You know when that behavior is over. Just knowing that can help you understand the flow, and it can be any structure. It could be same size gaps. This principle relates to market structure or lines and indicators that describe that structure, meaning it can be following a trend line and then it's not following it anymore. You can do it with indicators. Here, I'll just grab something here for a second. So for instance, if I take this CAD and I put some moving averages on it, okay, it's a 50 and a 200, no magic, it's just a point of reference. So what do I notice? Oh, look, we hit the 200, we lifted, we hit the right. If it does it more than once, hit the 200, made a new high. You need to be able to make that distinction. If it does it more than once, it's a continued behavior. If it stops doing that, it's changed. That's the beginning of developing a method. Don't get anything from the magic indicator here. We can put it on anything. I can put it on this stock. So you're going to look at price and point. I can pick any number out of a hat. Okay, this happens to be a 50 and a 200. Consider the 50 like minor and the 200 like a major. So if I just make an observation of the 50, I see, oh look, we are going through it. This is just a simple observation. I just picked this out of a hat. We're going through it about this much and making a new high. Look, oh, we're going through it about that much, making a new high. We're going through it about this much and making a new high. We're going through it and making, right? That's a continued behavior. And when that changed, we know it's changed, right? Just from the point of reference. Okay. Again, don't focus on whether the indicator, the method works or doesn't work. It's a point of reference. So let's go back to the show. If we understand that, right, this is the beginning. This is the beginning of thinking, all right, how can I make a method of this, right? I can push. If it's staying the same, I can just keep doing that. Or if it changes, I can think about going the other way. Right? Just right off the bat, you can come up with a lot of things. And it can be any indicator, it can be any line, could be a median line, could be any market structure, doesn't matter. Next, process. Everything moves in process, period, the end. Right? It's a series of actions or steps taken in order to achieve a particular end. That's the definition. Each market structure, each swing will have a beginning, a middle, and an end. Right? The result, if you see a mountain or a swing, you don't know it until it's over. The result is just a small part of the whole process. You don't know it until it's done. You can't be where you're not. Take this as even a mindset you want to understand. So often we focus on the end product of the trade. The end product is a result of a lot of things along the process. Focus on the process, 1, 2, 3, rather than the end product. Relative distinctions. So the market moves in swings, and we're going to isolate that in major, minor, bar level. And we're going to have definitions for this. The market moves in swings. We're going to isolate biggest, the next biggest. No matter what funny shapes it's looking at, right? We want to see the basic wave, right? We want to see the basic wave of price. So with these, we can begin to already start to come up with some ideas. So relative distinctions, major, minor, bar level. These are basic. Can be sloped to horizontal. And then the 3 basic types of trades, right? And you can go to other videos for that. You have pushing trades, right? When price expands, expand in reverse, or the try option. So just think about this in what we've been doing with understanding a cycle. Okay? So if price comes up and expands and starts making these swings, this might be a pushing type trade, right? You're pushing the market for another continuation. See, the swings are this big. So this is just a quick understanding of the 3 types of trades. If price falls back, taking all these people out, right, this part of the cycle, Right, this is expand. We're expanding. Then continue. And of course it's possible it reverses. And if you look, this is kind of what median lines are based on. Alright, let's see if we can get rid of all that. Alright, so we can talk for a long time just on this. But now let's get to making some simple definitions, right? If we want to structure this market, so this video is going to be about the nuts and bolts, making some definitions so we can think about, all right, how are we going to design some methods. So if we want to structure this market, we need some definitions, and I'm calling, and you can go back over previous blogs, you know, mapping market with swings. I have some definitions here. A new low confirms, a new low confirms a swing high, and vice versa. And then the relative definitions. Major is going to be the largest reaction leg. So the reaction leg is the leg against the overall trend. Okay? So this will be a major reaction leg. This will be a major impulse leg. Minor is the next largest. So if we're going to map it with a reaction leg to know the major, it's easy. Just look for the biggest. And then the next biggest is the minor. And these are all just definitions. Like, you can take this market and see if you can do it in your mind and find the major and the minor. So these are pretty objective. You know, another principle when it comes to designing your own method would be to keep it as simple and focused as possible, right, and as objective as possible. So the next slide just shows it mapped, and we go from here to here. Major, minor, it's the next biggest. Major, right? Market moves in swings, so we're taking what looks like chicken scratch here, and we're just understanding the waves. Understanding, hey, we have a major reaction leg, we have a minor reaction leg. And bar level swings as well, right? We can see, you know, lower low, lower high, lower low, lower high, lower low, lower high. So just simple definitions of the swing cycle. The reaction leg is what it pulls back. The impulse leg, right? It's an impulse. It's taking out. So let's just take a minute here and forget the technical following instructions and just understand what's going on. At this point, buyers literally picked it up and took it up here. As it comes through, it makes an impulse. These buyers lost. That's information all by itself. Down here, buyers pick it up, take it up. If it comes through, it confirms that swing. These buyers lost. If it comes back through the other way, right, you see who is in control of a market. And if we structure it, even the minor swings will have the same principles all by themselves. A new low, buyers picked it up within this frame. This gives us a clue about designing methods too, right? There has to be a frame. So in this frame, buyers picked it up, sellers hit it. So at some point, right, just to understand it, at some point, this is one extreme, this is the other extreme, and whoever gets taken out, right, gets confirmed. It tells you, oh, look, buyers couldn't hold it. It's as simple as that. Don't complicate all this technical analysis stuff. All right. And this is just some more definitions. You can look over this. It's the same thing. Just trying to show a major leg, minor leg. A swing is a swing is a swing. And it's still all just contraction, expansion. All right, one more definition. All right, we have a pivot here. So each swing is going to have a turning point. It's going to have a pivot component. It will have its own process to understand. And we can pretty much just label that out very objectively. If the price makes new low, it's going to confirm that pivot. And through observation, you'll see they have a very similar tendency, right, to pop like this. So it's basically step one, multi-pivot line. Step two, blast through some area. Yay! Step three, come back. Here, remember, it's process. It might be a mountain. It might not be a pivot. If it takes off, it's a mountain. You don't know. But if it comes through, right? So you can begin to see, and this chart's from 5-10 years ago. You'll see it in today's. So you can see, you can start to recognize the gap, right? We call this a gap swap. So that's the pivot component. Again, I'm not teaching a method just yet, although you might be getting some ideas. And again, just more practice in defining things. The biggest reaction leg is going to be the major. The next biggest is going to be the minor. And what you can do to basically follow this in any market live real time, as the impulse leg takes off, follow the swings in that leg until it changes. Even as the reaction leg comes down, if there are any swings, follow the swings until that changes. In the new impulse leg, follow the swings. That's following a market. So those are the definitions. It's pretty objective, and I've done a lot of blogs on that. And you can see the principles in play, right? Everything, the swing has a birth, a growth, a death, and then it starts all over again. If you understand this cycle, we can design methods in each part of this cycle. We can design methods in the early stages, in the growth stages, and so on. All right, so we got the nuts and bolts. Good. Again, it's just swings. Now here was just practice. We took a McDonald's weekly chart, and we had been following it from even before here, and we're just mapping it. So follow the definitions. It's an old slide. You can see, right, the biggest, if you open this up, right, the biggest leg is this leg right here. That's a reaction leg. The next biggest is this. These are minor swings. The minor swings will have their process, and the major swing will have its process. And here I say, at any given time, we can relate current price to the major and minor swings. That's that point of reference. Are they going up? Are they going down? So often when it comes, going to sidebar here, so often when it comes to trading, we wonder and think somebody else has the answer. But what I would like for everybody is never to have to ask, hey, what's oil doing? What do you think about Tesla? What about the S&P? How's the what do you think about the euro? If you can do this one simple task here, you never have to ask again. You just look and you see for yourself. Because quite often the experts that we're going to, these answers, they don't have a clue. Most of them have no clue. They just sound confident. But what we tend to do is go out and gather a consensus of people to lean one way or the other. We gather a consensus of people who don't have a clue. Instead, if you can do this much, you can just look. Because they don't know if it's going down or up any more than you do. But you can map it, right? You never have to ask again, what's it doing? Well, it's going up in major swings until it's not. The end. Alright, so this video is starting to go long as I babble. But you know what? Let's finish off with just taking this chart. So I did this chart, looks like back in 2013. Okay. So this is McDonald's 2013. So let's just, that's when we were working on swings in 2013. So you see not much has changed around here. So let's see if we can grab a McDonald's chart. There it is, 2013. This is where we left off. And again, you can just grab this chart, just eyeball it. You can start to see, you can begin to map. This is what was mapped in the slide. Majors and minors. So also when it comes to methods, if you can do this, and you can look at 1,000, 2,000, 10,000 charts, and you can do this, you will begin to see tendencies of a market on your own without anybody. You will begin to see tendencies. All you need is the ability, the frame of reference, the ability to map like this, and you'll start to see, oh, that's kind of normal. Markets tend to, as they're climbing, they're doing little swings, and eventually they grow up into bigger swings. Sometimes they reverse. You understand this, you have options. Play the little swings, play the big swing. So this even goes back a little farther than this to here, where it was born. So let's see what this market did from the time we made the slide. Looks like it went sideways for a while and then took off. So even if it went sideways for a while, this is still what? A confirmed swing low. Right? This kind of mapping doesn't tell you anything about time, but it tells you the market is going up until it's not. It's a confirmed swing low. A new high confirms the low. A new high confirms the low. And we notice it's about the same size. So when you're in real time, you follow whatever swings are making themselves available. We already know that this is the major swing. Let's see what it did. Let's see if it wanted to continue that behavior. So although the slope changed, right? It didn't ride the slope. What it did do is just go sideways a bit. Kind of looks like a median line, doesn't it? Right? So you begin to understand how median lines work. So let's just keep following it. And that's how you follow it. And you make observations. Alright, so now we get beaten by a decent amount, but it goes up. So we grow this up a little bit and say, alright, that's my new swing. That's my new swing. So we can see, boom, boom, try, and open way back up. Who would have thunk it, right? So anyways, this is current McDonald's weekly. Here's your instructions. Pick a frame. The largest reaction leg in that frame will be your major. The next largest will be your minors. And we barely have a swing here, but it looks like it's like this. Alright, so minors, 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 major. That's current. Okay? The end. We'll finish part 3 and see what we come up with. So today, just a reminder, we just going over the pieces and defining them and mapping, blabbing a little bit. Alright, so see you next time. Thank you.